Here you can see three colored boxes. The first one is the blue box here. The second is the yellow box here, which you can see right here. And the third one is the green box. And here you can see that when this green box was broken out, the market went up quite well. And this hasn't happened just once. If you look back, you will see that here too, the market broke out of the green box in the same way and went upwards. So this green box, what are these? What is this blue box? What is this? And what is the yellow box? What are they? And there is an indicator with the help of which all these three boxes will start appearing on your chart here. When you apply that indicator here, then what do these boxes denote? How can we use them in swing trading, intraday trading, and everything else? And the indicator I am going to tell you about, which indicator is it? What are the settings in it that you need to change? What all? Things you need to follow if you trade with the help of this indicator and these boxes? So let's find out. So before I tell you about the indicator, I want to explain what these boxes denote and why you are getting entries only in this green colored box. So what I will do here is open a PDF, and I want to tell you about this power of 3. Here you can see the power of 3. The first is accumulation, the second is manipulation, and the third is distribution. Mostly, people do. They make losses during accumulation and manipulation, and by the time it reaches distribution, their losses have become quite significant, so they aren't able to wait until distribution. Professionals, on the other hand, use distribution. Let me explain what these three things are. It is very important for you to understand these three things if you want to use the indicator that I'm going to tell you about today. So here, first of all, you will see how traps are set in the market. So look here, you will see a candle, and here you see the DNA. What is this candle denoting? It is denoting three things here: accumulation, manipulation, and distribution. Look here, this candle is denoting accumulation, manipulation, and distribution for us. After that, we will look at the chart to see how the chart denotes it. So look here at what the market is doing. Price compresses into a range mark. The boundaries, and observe. Do not predict. What happens in the accumulation phase? The price goes into a range. So look here. What was the accumulation phase? This open was the accumulation phase. That's your second one. Manipulation. The price briefly raids liquidity outside the range. Trade the first breakout at the suspect breakout. That was the manipulation. You shouldn't enter here. Look here. The candle opened below. It went and broke down. It created this, and here a manipulation will be created. Most people here will think that since the candle is forming negatively, the market will go downwards, and because of that, people get trapped in the manipulation here. And after that, the market comes to the third step, which is distribution. Here you can see that after confirmation, the price expanded towards external liquidity. Risk must remain predefined. Here you can see what the market did. It went into distribution expansion here. The price closed higher, so you must be seeing a candle phase here. Now, let me show you the chart phase. How do charts move? In phases. So the first one here will be the accumulation phase. What happens in the market? You need to keep three things in mind for this. First, wait to mark and identify the Asian session high and low. Equal highs and lows can indicate clustered liquidity. What do you need to do here? You need to mark the same high and low here, like you can see here. The market went up, came down, then went up again, and then came down. So what is this? This is a high, this is a low, this is a high, this is a low. You will see 2 or 3 such highs and lows. When the market moves in a range, we call this an accumulation phase. What should you avoid here? Do not force a trade inside the range. Choppy price can create repeated false signals. Here, what you need to do is not trade in a sideways market. You should not force it here. You shouldn't take a trade. You need to ignore the trade here because it's making equal highs and lows. After that, the third rule is, as you can see here, mark the range, set an alert near its edges, and wait for a clear liquidity event. So this is an accumulation phase. In this, you have to ignore the market. You will find out later when you should trade. After that, the second is the manipulation phase, also known by another name, the Judas swing. What happens in this? The market manipulates. You must have seen that the market is moving in a zone in an accumulation phase, and what happens after that? The people who try to trade this tight range here, what the market does is take their liquidity, go up, and then start moving in the zone here. This is what is called the manipulation phase. Here you can see what happens in this. Price moves beyond the range boundary and triggers stops or breakout entries, which is exactly what I just described. So what is the price doing? It's moving in a range. And what does it do here? It hits stop losses. For those who try to trade the range as well, after that you need to look for a time clue. Now, where is this pattern seen? This pattern is often watched near a major session open, but timing alone is not a confirmation. We cannot determine just based on timing when this phase, this manipulation phase, will happen, but you have to wait here. So what is the simple rule here? Wait for the sweep. That is the setup, not the entry. Here, the liquidity sweep, which is your setup. You should not enter here. Look for rejection and structure confirmation. Here you have to wait for a reaction, and the structure will be confirmed here. Whenever the market moves in a phase, it moves in 3 phases. The first will be the accumulation phase. In this, the market will move sideways. After that, there will be a manipulation phase, which you can see here. It will manipulate. And what happens after manipulation? The third phase, which is the most important one for our entry, will be the distribution phase here. The green box I showed you is exactly that. What happens in this? The market moves in accumulation. Here you got confirmation. Look for a decisive movement, a breakout through the range, displacement, and a change in the market structure. What happened to the market? It was in a sideways zone. In the accumulation phase, it manipulated here, and what happened after that? It gave a breakout from here, and this is exactly what you need to trade. This is where you need to enter. So you must have understood these 3 phases. What can you do? If you trade with the help of price action, you can apply the accumulation, manipulation, and distribution phases here according to your own analysis. But if you are unable to apply them, what can you do? There is an indicator with the help of which you can find this out. So now we will add the indicator, and for that we will come to the indicator section and search. The name of the indicator is AMD P3. You just need to type this, AMD P3. It will appear here, AMD P3 with live edge stands. You need to add this. Once you add it, it will take some time, and then it will show you an interface like this. You need to come to its settings. In the settings, we don't need the panel levels here. I will trade according to my own preference. After that, you will see lines here. Turn those off as well. And there will be a table. Turn that off too. We only need the boxes because we know that accumulation is happening here. To work in the manipulation and distribution phases, which I've explained to you in the PDF. Now I'm going to show you the same thing with the help of the indicator. So you need to come to the inputs here. You will see a lot of things in the inputs. You don't need to look at those. If you come down, what you need to look at is here. Which one is the accumulation phase here? The one that is blue in color. You can also change its color. The manipulation phase is the yellow one here. You must be seeing it. This is the accumulation phase, this is the manipulation phase, and which one is the distribution phase here? The one that is green in color. Now I had told you what to do in the accumulation phase, what to do in the manipulation phase, and what to do in the distribution phase here. Now you have to apply the same thing here. What do you need to do? If you are looking for a buying side here, then what should you look for? You need to see that the accumulation phase should happen first, where the market is moving in a zone. You can see here, after that, the market has manipulated here, and then the distribution phase, which will be formed for me when it gives a breakout here. Then we will trade here. What will be our stop loss? Our stop loss will be the swing low here. So as we take a long position here, where will our stop loss be? It will be here. The market went up, came down, then went up again. What will be our target? It will be 1:1, and after that, 1:2. This will be our target. After that, if we look back, we can see what happened here. The market moved in a zone, the manipulation phase didn't happen here, the distribution phase happened, the market didn't go anywhere here. After that, we look back. So you can see here what happened. The same thing. The market was in an accumulation phase. After that, a manipulation phase occurred, meaning the people on the upside were trapped here, and after that, the market went upwards after the breakout of the distribution phase. Similarly, if you come back, you can see the same thing happened here too. An accumulation phase occurred, manipulation happened, and after that, distribution happened here. This is a very good example. You can see here the market accumulated very well. Then what happened? It went downwards, and here people felt that now selling has started. It gave a breakdown of this level here, and what did the market do here? It manipulated the market, then gave a breakout here, and as you can see, it went up quite a bit, and in the distribution phase, it will give us a good target here. So what are the rules you need to follow? The first rule will be that our accumulation phase, manipulation phase, and distribution phase must all be formed. First, the accumulation phase will form, then the manipulation phase will form, and then the distribution phase will form. Once these three are done, our second rule will be that the distribution phase here it should give a breakout and it should give good candlesticks. So you can even ignore the trade here because, as you can see, the candle is not a very good bullish candlestick. So you wait, or you can enter on this candle or this candle, okay? This is the second rule, that our distribution phase should have a breakout. And our third rule will be that we will place our stop loss and target here. If we have entered here, then our stop loss will be the swing low. It will be there. You can see the swing low here. If we entered here, then where is our swing low? It's here, so it will be here. After that, the target will be 1:1, then 1:2. You should exit after 1:2. If you want, you can also trail your stop loss and take more profit further ahead. So these are the three rules you need to follow if you are going on the buying side. Similarly, if you want to go on the selling side, what will happen? In the market, the selling side will also be the same. Here, what will happen is that first an accumulation phase will form. Then a distribution phase will form here. It can break out on the upside or the downside. As long as this yellow color and this blue or gray color, whatever you want to call it, are forming, you shouldn't do anything in the market. Once a green colored box is formed and it gives a breakout with a good candlestick, then you should enter. So when it gives a breakdown here, you can go on the selling side as well. So the first rule for the selling side will be that an accumulation phase must form, a manipulation phase must form, and a distribution phase must form. Our second rule will be our candlestick should close below this distribution phase. And the third rule will be that if we have taken a selling position, our stop loss will be at the swing high. Our target will be 1:1, and after that, 1:2 for the selling side as well. So these are the three rules for the buying side and the selling side. So if you have understood the accumulation phase, manipulation phase, and distribution phase, then like the video. And if you want to use them with the help of this indicator, or even with price action, you can do it yourself here. And you can apply the manipulation phase, so go ahead and do that. And after doing this, what do you need to do? First of all, you need to backtest it. If you feel that this indicator or the strategy, the accumulation, distribution, and manipulation phase 1 is working well for you, then you can use them. So I hope you found this video informative. Like this video, share it, and subscribe to our channel. Thank you so much, guys.